Hi, this is Tracy Tofty with Patrick Lopez and Associates, and this is 411realestatetv.com. Today we are with Martin Rodriguez of Prospect Mortgage. Thank you, Martin, for being here with me today. We are in a deal with you right now in escrow with one of our buyers on Patrick Lopez and Associates team, and it's an interesting deal because it's somewhat new to me. He's in a loan called a 203K loan, and I'm sure a lot of people are familiar with FHA loans, 3.5% down. We show so many FHA buyers all day long trying to get into the market, first-time home buyers, even some investors, that there's too many repairs to be done, so they pass it by. So tell me where the 203K loan kind of steps in and can be an option for buyers out there.
Good question. Real simple, a 203K, don't worry about the name, it just is, it's part of the name in the loan handbook as to that it refers to, but the 203K loan is basically a home renovation loan. It allows a borrower to put in just a standard FHA down payment of 3.5% and get extra money above and beyond what's required to buy the house, gives them extra money to do repairs on the property. So it comes in two varieties, and I won't go into all the specifics of it, but basically if the home needs improvements, whether it be paint, a roof needs to be repaired, or plumbing or something,
right,
this could give a borrower $10,000, $15,000, $30,000 or so to fix up the house after they close escrow, after they buy it.
Okay, so let me ask you this. Let's say our buyer is qualified for $300,000 on an FHA, but the house needs $20,000 worth of work. We cannot look at properties over 280, is that correct?
Right, we're going to look at the qualifying standards for the borrower because they're going to qualify based on the entire loan amount because the money that's given to them will be included in their loan.
Okay.
So we overfund the loan on that. But I also want to clarify something too. A lot of people think that it's just an FHA type of situation where the house is in disarray and needs repairs, and it doesn't have to be that way. You can take a good house and make it really great. Most people buy a home and they do one of two things almost immediately. They either repaint the walls and maybe put in new carpet.
Right.
Sometimes you want to upgrade the kitchen or whatever. So you might have a very good house that's turnkey and still want to do stuff. This loan can be used for that too. So don't think that it's just, oh, we need to do repairs. It's, yeah, you can use it for repairs. And oh, by the way, if you want to just do improvements to make a really great house the way you want it, the money's there available for that too.
Are there any limitations to some of the improvements you can do?
There is. There are some limitations. There are some do's and don'ts, more than I want to get into on video. If anybody has questions, have them let me know. But some of the obvious ones, like you can't buy a house and say, oh, I want to put in a swimming pool and use the money for that. So the house, the money's going to go into the house to help improve the overall quality of that home, which in turn helps raise property values for that neighborhood because now you have a better home.
Fantastic. So now if the house doesn't have exactly everything you want, there are options for people out there.
There are options, and the key is with this program, you're only into it for 3.5%. So your down payment doesn't go up. So if you need $30,000 in repair work, you're not dipping into your bank account, into your pocket, where that $30,000 is being funded, and your down payment is still 3.5%.
Fantastic.
Cool.
All right. Very good.
Thanks, Tracy.
Martin.
Thank you.
Thank you, guys. If you have any more questions, you can give us a call at 661-290-3765. He's the man. Thanks.
Thanks.